evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo nightly video for a big earnings and a big volatility return to the market day here. It's the 25th of April, still 2023. Let's get started. We will talk about the pullback and the retracement and the sell swing, which is our reward pathway that's paying off for any puts. But before we get there, let's talk earnings. The big one, Microsoft. Microsoft just came out with earnings. You can take a look just in a 10-minute video. No way possible to get through all the numbers, but did have earnings in Microsoft, beat expectations. All the news is here. They beat revenue expectations. They're up, looking for about 2.3, revenue 51. No, they beat. Revenue was reported 2.45 and revenue almost 53 billion. And where is the stock? So for all of these expected move earnings plays, you may have butterflies on, you may have option trades, swing trades, or anything else, but we're going to focus just for the purpose of the video on what the market's pricing and where the market's trading. For Microsoft, that's about $11.50. Where are we trading? From this $11 up, I like to do it this way. Zoom in, take your number, take the close right there. So where is $11? $11.50 is right here at about the 287 per share level. Currently, Microsoft shares are above that, just shy of 290. Again, you'll know a little more at the end of the day after the video, and if you're listening to it in the evening or even before the market opens, and I have right now, which is right after the close. So right now, that 287, 288 or so expected move is breached. So was the market today to the downside on Microsoft beating the analyst expectations. But it wasn't the only one to beat analyst expectations. The other was Google or Alphabet. And that on its expected move was about $5.50. It closed the session about $5.70. Where are we with our beat? Oh, and they also announced a stock buyback or repurchase program. So in the end of the day with my session, we put that up to the 109 per share level. It's about the same, and that's where the Google shares have hit and traded down from in the after hours. Google shares, or Alphabet shares, I still call it Google, have beat expectations again. So beating expectations, all the numbers are here. You can go through those, but that's just two of the stocks that reported earnings. A quick look shows Texas Instruments, mostly unchanged after the earnings. Visa, which had its earnings just a couple of moments ago, expected to move about $8. Where are we here? Up, not quite $8, at least in terms of the after hours, up to about 238 or so. So when I'm looking at these, if I don't have positions, if I do, I'm watching even closer. But I'm looking at the after hours movement and where it goes on the intraday or the daily chart right here. So Visa shares into 235 have taken the price. We closed at that 230, 229 level. We're back to the prior high. And that same logic on Google shares have taken us up to here. Google, assuming no change, would open up in this area tomorrow's session. That's Wednesday. And Microsoft shares, although it had a nice pullback or retracement from that 290 sell side, the shares are trading currently right here. So we'll watch those in the morning session. But a quick note, anything out of the ordinary. Now these have already reported earnings. General Electric made a new 52-week high, but has pulled back and traded down after the earnings. General Motors had its earnings as well, up or down, in this case 4% on the session. Pepsi and Coca-Cola, Pepsi particularly. Coke was the opposite. It hit that sell side put play, that 65 per share, and came down. But Pepsi, on its earnings, did not turn in reverse. It broke above. So Pepsi shares are above those highs. And if you look quickly at this weekly perspective, and we see that they are breaking, yes, they are, to new 52-week highs in a stable and steady, persistent uptrend. So Pepsi shares, not necessarily Coca-Cola. Coke is on a strong uptrend as well, but maybe not as strong as Pepsi shares are. And just quickly, Dow Chemical down 5%. Outside of that, Biogen and Danaher. Danaher is off 8, almost 9% in today's session. That's on the flip side. That's one of those rare stocks at the moment in the S&P 500 making new 52-week lows. And there it is for Danaher. McDonald's is on the radar because it won't seem to pull back. Today was a pullback. Pullback just means it traded down from its high. And that was yesterday or the morning on its announcement. Jumped up and then traded right back to close under yesterday's low. The weekly chart is still bullish, and the money flow is still bullish on that stock. Others are Verizon, NextEra Energy, Raytheon, and I want to highlight UPS because UPS can be a harbinger of the broader economy, at least in terms of deliveries and how consumers, and also look at FedEx as well, are getting the packages. And if they tend to pull back and if their stocks or share prices tend to trade lower, it could mean that more people are not ordering as many goods and not having them delivered. So we'll be watching those shares closely, FedEx and, of course, UPS, which itself had a sell-side activity down away from this 195 per share. It snuck above it. That just got a little sneak above that 195, but we see that pullback or that rejection. So additionally to this video, again, focusing on what happened right in front of us, tomorrow's session has more earnings: Boeing, American Tower, General Dynamics, and after the close, we'll see Meta, Facebook. That's when we can see a continued pullback and some additional sell-side activity, but we'll see earnings in tomorrow. And beyond me, we'll have other instructors cover the earnings from this point forward, but multiple stocks are reporting on the next trading session and a few more later. That includes Amazon and other financial, Starbucks, Pfizer, and other ExxonMobil, Chevron, coming up a little bit later in the week. Starbucks is a little later as well. That all being said, where are we on the calendar and what is going on? A few things to make a quick note of. I like to stay within the S&P 100 for my swing trades and ETF trade. That's where I tend to be, but not just these major companies reporting earnings. 107 companies report pre-market tomorrow. 166 report post-market after the bell tomorrow. More than that, 187 report after the bell on Thursday, and 161 report after the bell on Thursday. Only 74 report pre-market on Friday, but we'll have inflation data and we'll have GDP coming up a little bit later and more economic reports, not just earnings. So let's get back to the big picture and where we are on the risk and reward. So what's going on, my perspective, at least in my swing logic, is that we are getting a potential sell swing activity. That is what we've been calling the reward pathway, reward against the risk pathway. And the risk pathway is a breakout. And that would be any particular positions would take loss or take heat or go underwater on the put side. And we need to guard those carefully, hedge or other types of trades to guard against a breakout. But so far as of Tuesday, that's not happening. The reward pathway, which is a sell side pathway, is occurring. And to put that in context, the last time we saw 4,200 was in May to June, and the next move of the market was all the way back to about, let's say, 3,800, roughly speaking, 3,750. We did get a push. That is a break. That is the risk. Took the market up, took it up 200 handles to that 4,400 before it returned back to its lows. A little bit shy before we took another sell swing activity or sell side activity in December. And the most recent play was in February, was a sell side activity and bear positions down from 4,200. Those are what I'm labeling for trade logic, the reward pathway, the profit pathway, the bear pathway, if you will. And above that is risk. So not happening yet, but anything can happen. And we always have the positions in terms of probability, not forecasting or foreknowledge. Lots of earnings will help clue us in to whether or not we're going to get another repeat scenario to the downside, or this time could be different just like it was in August. But even then the market turned back and made new lows. Not much different in the Nasdaq from its 3250, or just shy of 13,300. And the Russell is weak. It's almost at those lows, in part because the broader financial sector ETF is coming down from its 3350 per share. That's your broader financials. But KRE is your regional financial banks. And they are taking heat. They're the ones in focus. It's not so much the large banks, at least in terms of trades or swing trades. See, they've gone just about straight up, the large banks, in terms of the play. So since the financial crisis, we've seen a lot of money flow into those banks. So JP Morgan is up here just shy. And that's one for the scratch your heads on. But nonetheless, it is almost back at the highs, where other banks and other financial stocks are not at the highs. But it is the focus on KRE and individual retail or regional banks, which are making new 52-week lows. And if you ever are curious which stocks are in a given sector, go to the Analyze tab. We'll take a look at the fundamentals. And within that ETF, you can always jump inside where the stocks are in that ETF, the largest holdings all the way down. So let's be careful and safe as always. The market is currently in a pullback, and volatility, it felt like a lot more sell-side activity, but the market ended down 1%. It was the Russell, which ended down 2.5%. Crude was down there as well, and the bond market was up 1.5% in today's return to volatility. As always, be careful and safe. We'll see you later in the videos. This is Corey Rosen with tonight's Theo video update for April 25th, 2023.